Welcome to the Better Agent Podcast. If you're a real estate agent that's looking to grow your business, then you're in the right place. Whether you want to go from 5 to 10 transactions a year, or 10 to 50 transactions per year, or more, well, then this show is for you. I'm Josh Lavik, your host for the Better Agent Podcast, and in each episode, we'll bring you the tools, tips, and tricks directly from myself and some of the best leaders within the real estate industry. We have one goal in mind, and that's to boost your production and elevate your real estate game. Let's dive in and start creating a better real estate experience together. Welcome back to the Better Agent Podcast. I'm your host, Josh Lavik, and we are talking about real estate and things that I've learned after my 20 years in the real estate business about how you can improve your business and grow your business. And I like to bring on guests that have great stories and insight and knowledge to share as well. So I've got a great guest with me today, John Schneider, who I've known for years, actually. I've known you for many years, and we've definitely crossed paths and done deals together and come across similar opportunities and even investment opportunities we've talked about. You've got a great story to tell, and I'm excited to have you on the show and chat more about kind of your story and things you're noticing and where you're at now. With that, I guess I'll turn it over to you and let you give a little bit more of an intro about yourself and anything else you want to share to kick things off.
Yeah, I appreciate the introduction and you having me on. It's been good knowing you over these years. We've had a lot of interactions. In fact, started together at KW. At least I started there while you were there, and I think that may have been your start. But yeah, it's been a long road, and I enjoy the game of real estate probably more than I enjoy the agency piece of it. But the agency piece is a necessary piece to really understand how real estate works. And I think my primary gig is really in investing in real estate, and it's gotten to be a huge part of how I bring on new clients is using the expertise that I've gained through investing over the last 20 plus years, and then applying that to clients who are coming in and looking for their first investment or their next investment, and showing them the things that I've learned over the years, both through my own experience and then my clients and others. So it's been a nice road, and sure do love the game itself.
Yeah, so I love that you use that word. This is the game of real estate, right? Like, I think in some ways I have a similar approach, or I've used a similar approach, right? And just like my daily task or to do is like you come into the office as a realtor, as an agent, right? Hey there, hope you're enjoying the show. I just wanted to interrupt real quick and just say that if you want more of this discussion and topic about growth in your real estate business, then I just want to invite you to join us on one of our future masterminds. We do them every week, all the time, either virtually or in person. And you can go to realestateteammastermind.com, learn a little more about that, and sign up to join us on the next call. Again, realestateteammastermind.com. Hope you're enjoying the show. Take care. And your job is to find a deal, find an opportunity, find a business, book an appointment. And I think if you come in, with that mindset that, hey, it's a game, we're going to find an opportunity, maybe here, maybe there, and you uncover some opportunities, or you make some phone calls over there, or you reach out to certain homeowners, or you door knock, or you do an open house, or whatever it might be. But I think just having that mindset of, hey, this is just a game, and we're just going to play and have some fun and see what we can find. I just love that mindset.
Yeah, absolutely. It's not just my real estate either. I talk to my staff about this is, hey, life is a big game and have fun with it. In fact, I don't want to come to work and be worried about every little nook and cranny thing. Certainly there's stress, and there's the environment that you have that has there's a high dollar value to these transactions, and there's a lot of pressure on it, but let's enjoy it. We only live this one time as far as we know, and let's take the moments that we get. We spend a lot of our working lives, or a lot of our lives working, and we might as well try to enjoy every bit of it, and gamifying it for me gives that a little bit of that joy. And I love doing that with my team. We have scorecards that we keep track of what we're doing to make sure that we're hitting some benchmarks, and really just trying to encourage each other to make those benchmarks, and using that gamifying method to encourage ourselves to be successful and win at the game that we're playing.
Yeah, having a scoreboard, right? That's almost like a basic thing. I think that you go to a Packer game or you go to a Badger football game or something, right? There's a scoreboard, right? People know the score. Everybody can see it. And it's just, you're either going to win or lose. And it's not whatever's going to happen is going to happen. But I think finding a way to track your activities, track your metrics, do something and make it fun. And you can just be, It doesn't need to always be a grind. I love that.
Again, just find the joy in it. Because
Yeah.
again, I don't want to be sitting here dreading every day to go to work, and I don't want my staff to feel that way and the team members
No.
to feel that way. So how do we make it fun?
Yeah, for sure. No, I love that idea. Definitely. So let's talk a little bit more. I know you said a lot of, hold on a second. Yeah, sorry. A lot of your background and stuff has been in investing. And I know sometimes some agents out there, I know sometimes can be intimidated about investing or scared. And maybe they're a homeowner, but like they don't really deal with renters or not really sure, or even flips or other opportunities. Like, how did you get started in that when you were early on? I know you've done a ton of it over
Yeah.
the years, but if someone was getting started, how did you do it?
So I came from a banking background, and I'll give you some clip notes on what I did. But I was a wholesale mortgage broker at first, but I got recruited by a larger wholesale bank to sell mortgages to brokers. And one of the companies that I worked for, in fact, the last one that I worked for when I was in banking, they specialized with a construction to permanent loan for wholesale brokers, which wasn't a very popular product at the time for mortgage brokers to be able to do a construction loan, an acquisition, and then do a remodel and be able to get all the financing together for that. And so when I learned that product, I started to understand how financing was done through banks for acquiring a distressed asset, telling the bank what the after repaired value was going to be able to do a remodel and then create some value through that. And so it really helped me understand how to evaluate real estate assets and look at them as a future value rather than their as-is value, and how a bank would underwrite that so I could get more money than the acquisition price to do the remodeling that I would need. Because I think most people, when they are buying properties, man, I'm going to buy this thing for $100,000 and it needs 50 grand. And I got to put $20,000 on my 100 and then come up with the 50. And the reality is that's not the way that it works. You're actually utilizing the bank's funds on the future value of the property once you've completed the remodel to help with the financing costs overall. So you need less down payment. Each bank does it a little bit differently, but there's avenues to do that. So when I was in banking and I decided I was getting to get into real estate, happened to be right around when the market was crashing. And in 2007, I had already been doing some flips, but I was still working as a banker. And then I started to understand how to structure these deals so that the banks would offer me more money to do it.
So
And I
your
didn't
down
have to
payment
come
on that after repair value then?
correct.
So like a
Essentially
10
what
or 20%, is that typically what you've seen?
Yeah, so typically what you can get fairly easily is a 20% down on the after repaired value. So let's just say I'm buying
Yeah.
something for 100, but it's going to be worth 200, and I have to put $50,000 into it. So the $200,000 value is what they're going to base it off of. And they're going to say, okay, we'll give you 20% down on that 200. Now that's 160. They're not going to give you more money than you're actually going to need. And they typically will want 10% of your own funds. So you're going to say, hey, I'm building all this equity. And they'll say your cash input has to be 10% of the 150. So now you got to bring $15,000 in, but because you've created the value, they're not going to make you put in a full 20%. Now, some banks may make you do that right away, but once you establish a track record, they're going to allow you to bring less cash to the closing table. But usually that 10% is that minimum that they're going to require based on the cash that's needed to finance that thing, even if you've created that value. So they usually won't give you 100%, although once you get really good relationships, sometimes they do basically give you that 100%. You usually have to bring money to close, and then they'll actually give you money for drawing on that bank note as you go through the project, but that money would be available to you. So it's a really interesting way to understand how financing works. And actually at the time, I was doing well as a mortgage broker, but didn't have a lot of capital yet, and really needed as much financing from the bank as I could get, especially if I was going to do more than one property at a time. And in the first year that I switched over, went full real estate investment, I did 22. The first year I did 3, and then the second year I did 22 properties. And there was no way I would have been able to do that had I not had the bank's financing a good portion of what the rehab cost was based on my after repaired value. And that was at the time a pretty tough thing to get.
23 you did in your first year?
22. I did 3 in the first year, but it was like a very short abbreviated year. But my first full year into it was I did 22 flips. Now, most of those, I should say a lot of those were fairly light remodels. And some of them I ended up keeping and they ended up being some of my best investments. I couldn't sell them because the market wasn't as hot at the time, and I had to rent them. At the time I was really scared to rent them because I hadn't even done any rentals yet. And I was just flipping properties, but I couldn't just sit on them anymore. And if I reduced the price anymore, I was going to lose money. So I decided, hey, I'm going to keep these and I'm going to rent them. And then 15 years later, they become some of my best investments because the market in 07, 08, 09 was pretty bad.
It keeps going up.
Values went up. Yeah, values went up, and it was like, hey, I'm a genius. No, it was necessity was the mother of invention, and I was lucky. A lot of what I've done to some degree has been some degree to luck. I got into a market when everybody was saying you're crazy to buy and flip properties at this time. I'm like, God, the market's pretty low. I don't know if they can go any worse. And I made a pretty good bet on that at the time.
Yeah.
So that helped a lot.
Yeah, so I just want to highlight and acknowledge you for a moment. For 22 properties in like your first year, that's pretty amazing. Okay. And there's a lot of people that get into this business and they're lucky if they do a half a dozen deals their first year. Okay. For you to hit the ground running at that speed, at that pace, you're definitely moving for sure.
Yeah, I've always been a full throttle kind of guy. Once I find something that makes sense. I was named Rookie of the Year that year, which was pretty great. A nice little accolade from KW. Yeah. And I'm a hunter. I don't sit back and wait. One of the reasons that I got my real estate license in the first place when I was a banker wasn't to be a real estate agent, but was I wanted to get the analysis numbers out of Paragon. And at the time, we didn't have as many websites and stuff that you could pull data off of. And they still think Paragon is gets the best data. So I was going in there. Yeah, I mean, it's just got more stuff and it's changing, right? But I was able to get more data than other investors because they were relying on the real estate agents to get them. And I don't think a lot of agents do that. And that's one of the things that I was going to mention. Like this is for real estate agents, talking to real estate agents, maybe they don't do as much investing. But the reality is if you approach your business like you're an investor, you're able to crunch numbers. And I train this with my staff. You go in, you run numbers in neighborhoods that you're working on, and you do it day over day, week over week. And you start to notice patterns. You start to see what price per square foot is in the Albion Park neighborhood. You start to see what price per square foot is that in the Shorewood neighborhood. And then you start to recognize opportunities when they come up. And if you're consistently doing it, it's data over time that truly matters when you're doing real estate investing or really any investing. If you look at any data set on one given day, it doesn't tell you that much. But if you look over a data set over a 6-month period, a year period, and you're consistently in there looking at the data, eventually by osmosis, you just understand your market better than most. When you're having conversations with other investors or you're having conversations with other real estate agents, you sound and are knowledgeable about your market in a way that most people are not. And that it'll bring in investors that want to do business with you. It'll sharpen your pencil so that you make sure that you make good sound investments when you're ready to do it.
Yeah. I think that what's great about what you're saying too is you got to put in the time and put in the effort and get to know your market. And I think if you do that, I know that was true for me. I know my first year in the business, I wasn't nearly as successful, but I was only halfway. And I remember that probably second year in the business is when I really fully committed. And then I was more all in, and then my business immediately took off. But I think taking that approach and educating yourself beyond just going in a computer too, it's maybe going through a lot of different properties, walking through them, seeing them and understanding them. And you will, like you said, by osmosis, you can't not learn it if you're like walking through it and doing it. I think that's a great tip.
And I was making offers on just about every REO that came on the market at that time. And I would just write them low. And I had a template built in zip forms, and I would just send that template out. It didn't take me much time. I got a system together to make sure that I was clicking, and it worked. And I got a lot of properties. At the time, remodeling costs was way less. There was labor that was available. It was a little easier than it is now. And now it's really tough to do a flip and hire contractors, get them to do it in the time that you need at the price you need. It's a lot trickier these days, but if you can still do it and put a little bit more sweat equity in it, you just definitely need to know your numbers so that you don't, people think they buy right, and then they realize that the cost of remodel is 150% more than they expected. And now they didn't buy. So again, knowing your numbers both on the acquisition and then the exit side, as far as how much things are going to cost as you remodel the property, are critical.
Yeah, that's a great thing to think about. And that's something I personally don't know as much about, nearly as much as you, but like, how would you approach that? Like getting to know some of those remodel costs? Is there a a place online you use, or just
Well,
experience?
now there is, at the time, there really wasn't
Yeah.
that I'd found, although again, I go all in. I ended up starting a construction company at the time, which I have subsequently sold. I also started a design center so we could get our cabinets and countertops and all that stuff at a price that was
Yeah.
better than what we would be buying if we had to go to a retail spot, and we became the retailer. So we were in a market that was getting more compressed as far as price was concerned. We were trying ways to compress our costs so that we can increase our margins.
Yeah.
And
Well,
that
there you go. If you have your
really
own construction company, now you know the costs. You're bidding the
Right.
cost. You've
Right.
got your guys that are bidding the jobs, and either you're
Yeah,
doing it for yourself or you're doing it for other potential clients in the market. But either way, getting that crew and those people available, that's a good approach. I like that.
And I don't know, looking back, I don't know if that was the right idea. I think I've made more poor business decisions than I've made good ones. It's just the good ones have actually made more money than the poor ones diminished. So I make a lot of bad decisions. But I fail all the time. And then I just have to correct course. But I think we spent more time and money trying to put those together for our own use than just really finding better deals and acquiring more property. I think if I would have do it over, I probably wouldn't have done some of those things. But I think at the time I was full of piss and vinegar and was young enough to be like, let's go and do this. Yeah. And I learned a lot along the way. And now I'm in this position where I'm just trying to simplify, make the right decisions and make the right margins on the properties that we have or that we're trying to acquire, and not get myself too involved with the rest of it, so that I can focus on the areas that make me the most amount of margin and get out of the things that I'm not an expert on. And that's been my path over the last 5
years. That you didn't get there. You didn't get to where you're at now by not taking chances, right? Like at the end of the day, you had to miss. It's like shooting a dartboard. Right. You got to miss the bullseye a lot before you finally figure out how to hold your arm, how to do it, and hit the bullseye. You know what I mean? So I think part of it is just be okay with the miss, be okay with the failure, be okay with it, and just keep going and get in the reps. And so I think if you do that, then you eventually do get to a point where you're at now, where you're like, okay, maybe I can be a little more selective. I don't need this many opportunities. I need to simplify whatever is happening.
And I hear this from my teammates and from clients and people who are starting new jobs, and they'll say, hey, I want to just have work-life balance. And I'm like, and they'll look at me and they'll say, hey, you kind of get to make your own hours. And I'm like, no, but still I work more. I still am probably putting in 50, 60 hours a week. And back in the day, I was putting in 80, no problem. I mean, just like Wisconsin, I was working just way too much. But I don't believe in work-life balance, to be honest. I believe that if you really want what you want, you got to go for it, and you got to be willing to be unbalanced. You can't be that all the time. You will never survive. Yeah. I think you have to push yourselves well beyond your comfort zone to find things that are going to be, when you're going to be successful beyond a normal capacity of people, you're going to have to push yourself beyond that threshold of what normal people would do. And if you're unwilling to do, that's fine too. Not everybody has to be driven in such a way that, that they work constantly or whatever.
Well, not everybody flips 22 properties their first year. Okay. Yeah. And I think that's point in case right there. So you need to, I think, maybe identify yourself and your goals and where you're at. Right. And maybe your goal isn't 22. Maybe it's 10 or 5 or 3. Heck, it could be 1. How much different could your life be if you, as an agent, if you flipped 1 or 2 or 3 properties a year to supplement some of your other commission income? I know for me, that's been my case. I've flipped a property last year and one the year before, and I'm doing one right now. I'm not doing a ton nearly to the scale you are, but I've got other things going on too.
And that's one of my biggest problems, as I had a hard time saying no to any good investment that I thought was good. I ended up buying an asphalt manufacturing facility that I still have. I had this construction company. I had a design company. I do a lot of rental real estate. I do flipping. To some degree, I've shot the gun in too many different directions. And now I have to kind of rein it all in. But that's just the nature of who I am. I keep talking about being semi-retired in a few years, and semi-retired is probably full-time for most people. For me, but
that's just my nature. Instead of 6. No.
yeah. It's just what I have a tendency to get myself into. And it's important that people understand their own limits and what they really want out of their lives, and sitting down and writing down your goals and then trying to stick to a plan that's going to help achieve those and not getting derailed. And it's certainly been an area I've struggled with, where I have a tendency to write my goals out, but then I have a tendency to get derailed and be like, find another opportunity, be like, oh, why not try this? And it certainly has created some additional stress in my life. And maybe that's where I get all my gray hair and lose a little bit too, but that's just part of it.
That's all right, man. That's part of the fun. I don't know. I'm getting some gray, I think, on the sides. I don't know, but that's awesome. So how do you evaluate? Let's talk about, how do we evaluate what type of returns you look for on a deal? I don't know. Maybe that's worth
Yeah.
talking.
There's really, I don't know if you've talked about this with other podcasts, but the big things the reason that I invest in real estate is because of the 4 benefits that actually exist in owning
Mhm.
real estate. And number one in real estate is your income approach, right? It's whatever income benefit you get, if there's cash flow or if it generates a hard 30 grand or whatever after you sell your flip, that's the one. And flipping property presents that one. Then there's your debt service benefit. And that's really what you get when you rent a property and somebody else is paying your mortgage and you're paying off your debt service with somebody
Totally.
else's money. Then there's your tax benefits, which is once you own multiple pieces of real estate, really starts to show its face. I always tell people that if you want to go buy one rental property, you want to have one, don't do it. You really, if you're going to invest in real estate, it starts to make sense right around 5. That's 5 units, whether it's multifamily or single family, whatever. That's where you start to see the benefits, because everything before that, it's just a hassle and there's not enough revenue there to really make a life any different. And once you get to 10, now you start to really see the benefits of owning rental properties. And you have a system in place that allows you to deal with those rental properties that feels less cumbersome, and you're not just occupying your mind for this
Yeah,
one
you can
property.
send one handyman or contractor to different properties on different days and that type of thing.
Yeah.
And yeah, that
Yeah,
makes
and
sense.
then there's the last benefit, which is a more speculative one. And I typically don't evaluate things with this one, and it's just your appreciation benefit. But
Sure.
understanding that those 4 benefits are what real estate is all about, why real estate is such an incredible vehicle for generating wealth, because you bring all those 4 together and you get an exponential rate of return. And one of the biggest things that we talk about is your return on your investment, as well as your return on your equity. So what happens in year 1, people look at your cash on cash return. So let's just say I put in $10,000 on a $100,000 property and I make $1,000 a year.
Mhm.
On the real estate asset, I'm making $1,000 on the 100 grand, but really I only put $10,000 in. So I'm making
1,000 on the
10%,
10,000,
$1,000
10%.
on my 10 grand. That turns over in year 2 to return on equity. So if I were to pay, and just for simple numbers, I were to pay the debt down by $1,000 throughout the debt service benefit, and then I were to appreciate that property, let's just say it's by $1,000 to make it easy. Now I have $12,000 of equity in that property, and I'm really only still making my $1,000 of cash flow. So my return on equity is going down every year. I'm losing my valuation to the equity gain that I get from both the debt service going down, the principal balance going down, and the value of the property going up. Now, you're not going to sell a property every year because you're losing your equity, your return on equity, but every 5, 8, 10 years, trading your real estate out, which is you do in what's called a vehicle that's called a 1031 exchange, which most people have probably heard of, allows you to reallocate that equity piece to an asset class that's higher than the original investment without paying any taxes.
Yeah, totally.
And that's the game that really starts to generate serious wealth, because all of a sudden you're able to take. We just did a 1031 here on a property where we sold a $300,000 asset, traded it for about a $450,000 asset. And I was able to put roughly $200,000 down, and the cash flow on that property is going to be greater than it was on the prior property. But now I've got more depreciation to write off, because I originally acquired that $300,000 property for 160 or something. So I had, a depreciation that was getting utilized and wasn't as aggressive as what this new $400,000 property will appreciate at. So I'm getting more depreciation at. I'm getting more depreciation dollars out of that new property. I'm getting more cash flow, and I'm also getting more tax savings at the same time. So you're reducing your taxable income, all while increasing your cash flow and having an asset that will appreciate. Let's just say it's appreciating on average at 3%. If I appreciate a $300,000 asset versus a $500,000 asset, I'm getting more dollars per year out of that $500,000. So utilizing all those benefits and a tax advantages of a 1031 exchange, all of a sudden you're just like exponentially increasing your wealth. And that's one of the things that I do, that I help real estate investors understand. A lot of times they're looking at their return and they say, man, I'm making 10
Yeah.
grand a year on this
Yeah.
property in cash. I'm like, I don't understand, but you've already depreciated your entire
Yeah.
asset and you're getting no tax benefit anymore. And
Yeah.
you've got all this trapped equity in a $300,000 property that you have no debt service on anymore. So you're losing this. You could take that $300,000, put it into a $700,000 property, cash flow similarly, but get all these additional tax benefits. And in the
Sure.
end, you're netting more than you would. Even if you were getting 10,000, you could be getting $7,000 of cash flow in the new property, but you get all of that as a write-off. You don't have any taxable gain there. And
Yeah.
now you're actually making more money.
So it's way better than, because I'm thinking what's coming to mind is like somebody that's maybe owned their property for a long time, might even be paid for, and now they feel like they've won because now they're just 100% cash flow because they got their property paid for, but
Yeah.
it's fully depreciated. They're not getting any tax benefits. They could actually 1031 exchange that, even have a little bit more of a mortgage and be way better off. And
I have people, we've had conversations about like debt, and I've had people say, don't you want to be debt free when you die? And I'm like, absolutely not. Now, I want to be debt free with I don't want carry any debt that doesn't generate cash. That is a different story. If it generates cash,
credit card debt,
I don't mind
just
the debt.
holding for no reason, bad debt.
I mean, I don't like auto loan debts. I don't like credit card debts.
Yeah.
I don't like any of those things because they don't generate cash. But a debt on a mortgage that generates cash is a totally different debt. It's basically a tax haven. And usually the reason that you're carrying debt as a seasoned investor is because you're leveling up your asset classes and you are utilizing that new asset class to assist with your depreciation of your taxes at the end of the year. And you're using the depreciation of that asset to do that. And honestly, that's the game that I'm in now. I've been doing this for how many years, 20 plus years. And right now it's okay, how do we take the trapped equity, the return on equity that has started to diminish at such a point? And sometimes it does mean less cash flow. But what it does mean is you get better tax write-off. And it's funny, I have a thing that will show me how much cash flow I have on the property, and then what's my cash flow before or after taxes. So my tax flow or cash flow on a property might be, let's just say it's $5,000 a year. But when I look at my taxable income on it, it's actually $7,500. So I saved an additional $2,500 in taxes that makes the cash flow better. And I evaluate that when I'm getting ready to make an exchange with the property.
Yeah. No, that's smart. That's a good thing to do. That's a good way to think about it. I know there's a lot of agents out there, right? A lot of realtors that don't invest in real estate, don't even think about it, or they hope for it. But when I've done some of this, but I don't quite have as many units as you, but I think it's certainly worth considering of how can we look at the investment opportunities out there to just create that additional wealth in your business. We're already there. We're in the business of real estate anyway. So why wouldn't we look at that as an opportunity?
And if you're a real estate agent and you're getting commissions, you can write off your commissions against depreciation. So you can do you get a lot of savings because it's all investment income. It's all real estate income. Your commissions are just part of it. So if you have a lot of real estate assets and you're a high earning commission real estate agent, you can save yourself a lot of taxes on owning real estate. So it's not just the revenue that comes in through the property, it's your commissioned income that can be impacted as well as far as taxes are concerned. And you need to talk with your accountant on how that works for your particular situation. It's an incredible tool to generate wealth. And that's why I don't sell a lot of retail property. We do listings and help with buyers on their general single family residence, but that is a small part of what we do as real estate agents in my firm. Is we mostly represent people who are acquiring investment real estate, multifamily real estate, commercial real estate. That's what we do.
Cool. That's awesome. We've talked a lot about investments. Holy cow, that's awesome. I'm learning a lot. You're reigniting. I've taken some real estate investment courses years ago. I remember taking one from Tom Lundstedt.
I took that one. That was a good one.
It's a great one. And he's super funny. He's hilarious. He's a former ball player. And he talks about all these things and the 4 benefits and how it can be, they're available. And it's part of it is just like you can run the numbers and crunch the numbers. But also, I think what I also take away from just what you're sharing too is have the courage to just go for it too and go all in and go for what it's got to be.
As a real estate agent too, Josh, if you're coming to, I say this when people are buying their primary residence,
Yeah.
I want them to understand their home as an investment. Just like I would evaluate it if it was a rental property. Is it something that's going to be easy to sell? Is it on a corner, busy lot? Like, how do they look at this? They may just be like in love with the kitchen. And I say, hey, it's great. The kitchen's great. But how does the rest of the investment, this is your single largest investment most families will make, is their primary home. So how does this investment really fit into the scope of, will it be a really good investment for you? Now, you don't have to always make the decision based on that, but you at least should go into that transaction with your eyes wide open. And I think it's a responsibility of a real estate agent to help them see that. Whether they want to choose the house based on its investment characteristics is up to them, but they should have their eyes opened by us as a real estate firm to know if it is going to be a reasonable investment. And in the past few years, we've had people writing offers $100,000 over ask price to get in there.
Sure, yeah.
Obviously, that is a challenge. It may not be an investment that says they want the house. Great. They should just know that going in. They should know that potentially they may be upside down in a couple of years on this house, whatever. It just, they need to know the good, bad, and the ugly about every piece of property that they buy. And I think one of the challenges that I see with real estate agents in general is a lot of times it's just transactional, and they're not really looking for their client's best interest. And I encourage people to really do that. And I think the really good ones do. But if you have only had one transaction in a year or two transactions in a year, it's hard to think that way sometimes.
Yeah. Yeah, you got to think about that too. I think sometimes I've noticed that too with sometimes people either building a new home, right? It's like even some of those things that I just want to build it how I want to build it. But if you think about it, you may not be in that home forever, right? Let's just maybe incorporate some consideration for that future resale if that happens to be something that comes up at some point.
And some people have the money. They have the money. You want to do what you want to do. Absolutely go ahead and do it. But I think it's important for people to understand what makes a house marketable. And if they can get closer to a good exit strategy on the way in, they understand what that exit strategy looks like. They've just made a more sound decision for their financial future. And like I said, this is a big investment for most people, and it's wise for them to at least have those considerations in mind.
Yeah, for sure. Man, this has been rapid fire talking. I like it. We've talked about a lot of different things investing wise. Anything that's on your mind that you think our listeners?
Well, I got a question for you. So the market's been it's an interesting market this year, right? It seems that it's still what I would consider to be a seller's market, but it's a softening seller's market. And has presented a little bit of fear from sellers, I think, but the market is still a pretty good seller's market. But I feel like there is that uncertainty has created some opportunities for buying. At least I've seen that for buyers out there. They don't have the competitive nature that was once there just a year ago. And how have you seen that line up with your clients over the last 6 to 12 months?
Yeah, so most of our business is more on the resale side, definitely on the brokerage side, I would say. I deal with some investors, but not a ton. Most of them, I would say, are more single family condos. And I've probably experienced definitely some uncertainty, and I've had a number of deals actually fall through more so this year, I'd say, than I have in previous years, or people just getting kind of cold feet or just like feeling they changed their mind about things. I had somebody that actually changed their mind about I think they were on a H1 visa. And so with Trump's changing up and wanting to have 100,000 for their new visas and just his policy on immigration, they totally hit the brakes. They were going to plan to upgrade into a real nice home and just totally hit the brakes. So I think there's definitely more uncertainty. I think there's been a lot of people hoping and that interest rates are going to come down, and I just don't think it's going to happen. I don't think it's going to happen dramatically enough to maybe make a difference. Could it come down 5.5% from 6? Yeah, probably. I could see that happening, but I don't think we're going to get down to the 4s anytime soon. And so I think if there's people out there that are, if they're thinking about making a move or waiting for interest rates to come down, I think I've had some people. I had one client earlier this year that they've been in their home a long time and they were locked in at a super low interest rate. They could have stayed there, but just didn't want to anymore. It's like they wanted a little bit more space. They wanted a different neighborhood. They wanted a newer home, and they crunched some numbers on just what they could afford. And you know what? Even though yeah, the interest rate's higher. Yeah, the home price is higher, but they could still, it was well within their budget and they could still afford it. And for them, it made sense. And I think that's the opportunity out there. I think there's a lot of people that are probably sitting on a lot of equity and a lot of that are just maybe, oh, I can't move. I'm locked in at this low rate. You're not necessarily locked in. How much longer you don't need to stay there, right? What's your family life
Yeah.
situation worth, right? Like it's a trade-off, but I'm not saying you need to be house poor and like go way over budget. But I think actually one of my neighbors in my neighborhood, we moved about a year and a half ago, and somebody just moved in about a month ago right down the street, and they were in a kind of a similar situation. They had a house and I think almost paid for, locked in at a low rate, and it was same situation. It was an older home, and do they remodel it? Do they change it? They also wanted to just get into a slightly different neighborhood. I think if there's people out there that are just staying put because they feel like they have to, I just want to encourage them. I don't think they have to, because I think the market is stabilizing and it's coming to be, I'm noticing it's becoming much more of a balanced market. Yeah, we've been in a strong seller's market for a long time, but I think it's definitely becoming more balanced, maybe at and below the median home price, under 450. Yeah, there's probably still strong demand, and some of those homes do still sell pretty quickly, but not necessarily, there's not as many of them. But I think I think for those people that maybe own a home at or below the median price, like those are the opportunities that probably could contribute to more of the inventory.
Certainly that interest rate fear that people have that I'm going to go from 3 to 6.5 is a hard one for them to stomach, especially when 3% is a mortgage that's now 120 grand that they bought the house at 300 and it's down or 250. And now they got to go buy a 6.5 house at 6.5 that's $500,000. So I understand the fear, but I agree. Like, how long are you going to hold yourself hostage to a low interest rate? And so one of the things that, back to investing here, but is there a good time to buy? Yeah, but you can't really time it. You just got to buy all the time. And it's the same thing. That's a dollar cost averaging with stocks, right? Like people, sure, you want to buy the dips, but you can't always do that. And what they really teach you to do is
going up.
you just constantly buy, and you'll buy some dips, you buy some highs, and you're going to dollar cost average it, and you're going to be okay.
Yeah.
The key is to stay investing. The key is to be moving forward. And one of the beautiful things about owning a home is the $500,000 exemption clause for taxes that you get every 5 years. So you can take your $300,000 in equity and sell a house and go buy another one. You pay nothing in tax. And it's almost that's pretty much a 1031 exchange, but you could take 200 of it out and spend it if you wanted, or you could put it down on a house, but you pay no tax when you sell your house. So that is just a massive thing. And for me, I used that 4 times, bought a house, sold a house, bought a house, sold it. By the time I got to my last house, I didn't have a mortgage anymore.
Yeah. Yeah.
You don't have to think of that's one of the things I talk about being an investment. If you're 20 years old right now, 22, and you're trying to figure out how to buy a house, try to figure it out, because you know what? You might hit a dip. The market could take a dip here and you'd stuck in that house for a little while. But if you can weather that storm, it's just like the stock market. You weather the lows and you just stay in. You don't sell your stuff when it's low. You just hang on for a little bit longer, hang on. Eventually the market will come back and you will get the benefit of owning that piece of real estate. I do see that right now. I think the statistic came out that's like the highest percentage of home buyers right now is like between 45 and 55 years old. I think
I think I saw that. Yeah, it's like the highest age that it's been like ever or something.
So I think the younger generation is scared of the market, which I can understand. It's expensive. It's been on the way up for a while, so there's downward pressure potentially, and I can understand their reluctance. But I still think that the way that our tax laws are written and the way that the incentives are built for home ownership, there's just no reason to truly wait. The sooner you get in, it's just like the stock market. The sooner you get in and start investing, the longer you're in the market, the better off you're going to be. Waiting just delays the inevitable gains. But again, that doesn't say that there won't be hardships, because the stock market does come down just like the housing market will come down. But if you hold on for long enough, it's not too bad.
Yeah, for sure. No, I think that's great advice. I know, I bought a duplex, probably 15 years ago, and it's been one of the best investments I ever made. And I lived there for a couple of years, and then my wife and we had a baby and moved out and needed more space, but we kept it. And that's helped fund a lot of other things in our lives that Wouldn't have been there otherwise.
Yeah.
Totally right.
It gives you some security. It's a little bit more certainty, right? When you're
Way more.
a real estate agent and you're building your business, you don't really know what the next paycheck's going to look like, right?
Yeah.
And if you have a few of those or one of
Yep.
those, even it can be just a little bit of extra spending cash that comes in.
Yep.
And you learn, again, you're learning so much about what you're selling, even if
Yeah.
you're selling primary residences. But if you're managing your own piece of real estate as a
Mhm.
real estate agent, you learn a lot from that. And you can lean on that experience to talk to clients. And honestly, I think that is the number one reason why every real estate agent who has the desire to,
Mhm.
in any capacity, to really hit the market well, you're going to want to start investing. It just helps you explain everything. Just imagine just transactions. Every transaction you do just shows you a little bit more about the market. And when you're talking to clients, it just comes out, and you're an expert in that area. It makes a lot of sense for them to do business with you.
Yeah. No, 100%. You learn by doing it and owning it and just trying it for sure. Yeah. Just when stuff breaks and you got to figure it out, and you got to figure out who to
Right.
call or what to
Exactly.
do. That's part of home ownership. That's part of being a landlord, even, or whatever it might be.
Right.
You learn so much in that process for sure. I just replaced a bunch of windows. I learned how much those cost. Yeah.
Yeah, they're not cheap.
Yeah.
Roofs, it's crazy. That's one of the challenges that's going on with the real estate market right now as an investor, is the cost of things has gone 100% more in the last 4 or 5 years. We were building, I remember when I built my house, I'm pretty sure I was like at $130, $140 a square foot. And that same house is now, if you could get it built for $250, it would be a steal. So it's nearly double or double.
Sure. Yeah.
So that makes things a bit more of a challenge. And then remodeling is the same, and just getting people to do things is a challenge too.
Yep. Yep. For sure. Cool,
Let
man.
me ask you one more question.
Yeah.
Where do you see your best return on investment for generating high quality leads for real estate buyers and sellers?
Well, that's a good question. I think for the longest time, I think I've followed a lot of the KW models when we came out of that, and it's just building a database, right? And so I've been building our database for years, and I don't know, we got probably 10,000 leads in there, and we just continue to cycle through them and follow up with people in certain ways. And that's probably at least a third of our business for sure. And it's just a matter of catching people at the right time, providing value along the way, providing information about the market if we need to. We do certain events for our clients. We just hosted an event over at Warm Belly Farms over in Cottage Grove, and I've also started doing a little bit more on YouTube, and we try to post different content out there for just people in the market. And then that also helps us gives us something to provide to our database and stay in touch with. And then from there, it's a variety, right? We get some from referrals, from either past client referrals, broker referrals, from company, other portal referrals. We get some of those, and they come from all over, right? Some people I'm not good at open houses, but some of our agents on our team they love doing open houses and capture leads that way. But to me, I'm a similar kind of hunter mindset, right? But I'm hunting in our current database and then continuing to build it every day. So I'm always adding to it. I'm always refining it, but also trying to find where's the opportunity and catching people at the right time.
It's interesting. What I haven't heard you say is Zillow leads, or and I think it's really interesting because I think a lot of real estate agents think that they can come into the market, throw money at an issue, and solve their problem. And I've been of the same mindset. Bold is what the KW training was. I believe that was like relationship building. When I first got in the business, I got into a marketing group called By Referral Only. And I do spend marketing dollars now for real estate acquisitions, but for so many years, I didn't do any of that. And everything came from referrals. And I think that it's important that real estate agents these days really understand that the game of real estate is played by relationships, and leveraging your personal relationships, not even your business relationships, your personal relationships, with a statement like, brand new agent, I'm coming into the market, mom, if you know anybody that's looking to buy, sell, or invest, I would love to have a conversation with you. I know I may be green, but I have a great team behind me, and I would love to be able to have a conversation with them. It'll help me get better at my craft. And
Yeah.
being vulnerable in this business
Yeah.
as a new agent and allowing yourself to say that you're new, that you have a support mechanism behind you, but
Yep.
you are looking to hone in on your craft. And
Mhm.
anybody who's willing to speak with you, you'd love to have a conversation. If they don't have to be buying, selling, or investing, doesn't matter. And I talk a lot of that about that with my own team, and I get a lot of pushback. Guys, just people don't want to do that, especially to their own family and friends. They feel
Mm.
like it's intrusive. And I'm like, guys,
Yeah.
this is where your business comes from. And when you
Yeah.
don't have a database of 10,000 people because you've been in the business for 20 years, you need to start building one. And this is where you build it.
You build it one by one, and you know what? Every brand new agent out there has at least a couple hundred names just in their cell phone minimum. They should, just from people they know, or go on their Facebook page. Like they know hundreds of people, probably even people that say they don't know anybody still has 300 friends on Facebook. Okay, but those relationships absolutely can help catapult your business. I think the other key aspect of that is they want to help you, they want to support you, and some
Yes,
people,
absolutely.
they would want nothing more than for you to be successful. Reaching out to them and just saying, hey, this is what I'm doing, this is my new opportunity. They're going to be excited for you for sure. I think is a great idea. Have I purchased leads and the Zillows and the realtors and all the other things? Yes, absolutely. I've spent money on all of them. Okay.
Yeah, same here. But that's not primary, right? That's not where.
No, it's absolutely not primary. My primary has always been our personal database, has always been at least a third to half of our business at all times, pretty much. And I think it'll always be that way, right? I've been doing this podcast for about a year now, and pretty much every agent has their own database, their own sphere of influence, the people they know, their own relationships is a core part of all of their businesses. And I think it's just a matter of leaning into the authenticity of who they are, what they're all about, and knowing their craft and just going all in. A lot of what we talked about even here today, right?
Yeah.
You went after investors because you wanted to be an investor. You understood these loan products at a way that other agents didn't. So that was like your niche, your specialty. And I think that can be the opportunity for newer agents, or maybe agents that aren't finding success, is like, find your niche, find something you're passionate about, and just go all in, and just don't be afraid about it, and just be that hunter mindset and go after it. And you can totally make it happen.
Absolutely. I appreciate you having me. I just wanted to say too, if there's agents that are out there that are listening to this and they have interest in having a conversation about real estate investing, you can find me in all kinds of ways. So feel free to reach out. I do like, I was talking with my team actually this morning about this, about how to get into investing. And I've got a couple of new young ladies that have started that are like interested in doing something like that. They're still pretty young. I'm like, but this is the time, and it's not as hard. You don't need as much money as you think. And all you really need is somebody to give you some confidence that you can do it. And I did have a mentor back in the day that was a real estate investor, and he was in Green Bay, which is where I'm from. And he definitely encouraged me to take this path. And it was years later that I did, but it was watching him do it and be successful at it when I was younger really gave me the confidence that I could do it. And having somebody to not necessarily model yourself off of, but just see, hey, I can tell you, I am not the smartest guy in the room. That is for sure. I do work harder than most, but I am not the smartest guy in the room. But I'm willing to bet my work ethic is what keeps me in the game. And if you're willing to work hard, eventually things start to come together. And if this is what you want, it's pretty easy. It's out there for the taking. There's plenty of room for more investors in our market and in other markets. And I welcome the challenge to talk to people who are interested in that. That's always a big part of what I like to do.
No, I love it. I loved this conversation. I loved refreshing my own mindset, because I've always been curious on the periphery about investing. And like I said, I've done a handful of investments, but not nearly as many as you. And my dad owns a bunch of rentals and investment properties. And it's always been, I think, a part of my business in some capacity. But I think we've reignited that trigger, that passion a little bit. Hey, maybe I need to open my eyes a little bit more, because the opportunities are there. And if we just keep our eyes open, I think we'll find them.
Yeah, awesome. Great.
Yeah. Cool, man. I really appreciate you coming on the show. And I know I got a lot of value out of our conversation. So I hope our listeners did as well. And this has been a lot of fun. So
sounds good. It's a pleasure speaking with you, and we'll look forward to ski season and seeing you out on the hill.
That's right. We'll see you up on the slopes for sure. We'll be up at Cascade Mountain and the other local hills in the Midwest here. Definitely looking forward to that. But thanks again for coming on. And that's our show for today. So if you're If you enjoyed this conversation and you want to hear more about similar things and how to grow your real estate business and tips from other experienced professionals in the area, and then tune in to our next episode and we'll probably bring on another awesome guest. But that's the Better Agent Podcast for today. And I'm your host, Josh Lavik, here with John Schneider. So thanks for tuning in, and I hope you guys have a great day. Thanks for tuning in to the Better Agent Podcast. I hope you found today's insights valuable. Don't forget to subscribe and leave a review if you enjoyed the show. Stay tuned for more tips, Q&A sessions, and sneak peeks into our 21-day challenge. To get full access of our show notes and more details on the 21-day challenge, go to abetterrealestateexperience.com. Keep striving for greatness, and I'll see you on the next episode.